Hi everyone, my name is Nara and James and I will be going through an overview of cyber insurance for small to medium enterprises. James and I are currently graduate brokers in the big cyber specialty team. And to tell you a little bit about the cyber team at Marsh, we're a team that's dedicated to working with clients, prospects, and colleagues across Australia and New Zealand to build resilience and confidence in the area of cyber risk. The team is the longest running dedicated cyber practice in the Pacific, and we have over 50 years of combined experience in the insurance industry, ranging from small to medium enterprises to ASX-listed multinational companies. Tell you what's going to happen today. We'll start with why cyber risk is a threat, the cyber threat landscape, why cyber insurance is so important, some important privacy changes, and finally, we'll be going through a cyber insurance case study. We'll also have a couple of quizzes throughout the webinar to test your knowledge on cyber insurance. I'd like to start off by defining cyber risk, which is the possibility of loss or injury of, relating to, or involving data or technology. So what is data? Data is any factual information that can be used on the basis for reasoning, discussion, or calculation. Data can also be information in digital forms that can be transmitted or processed, or informational output by a sensing device that needs to be processed to be meaningful. What is technology? Technology can include computer system networks, electronic devices such as Internet of Things, automated machinery and equipment, or computer systems that are able to perform tasks that normally require human intelligence. And this can include artificial intelligence or AI. So some of the top cyber risks for small businesses include personally identifiable information, commercially sensitive information, protected health information, Internet of Things devices, financial assets and payment card information, and research and intellectual property. And the main reason that these are the main targets for hackers are because the primary goal for threat actors is to steal as much confidential data as possible for financial gain. So for the first question today, what do you think was the most common cyber incident claim type between January and June 2021? Was it data breach, hostile external, data breach, hostile internal, network interruption, ransomware, or fraud? So the most common incident by claim type was data breach from hostile external sources, which made up 32% of the incidents. Now, this statistic emphasizes how data is extremely valuable to threat actors. So it's important to look into how your organization is securing sensitive data, such as intellectual property and PII. So for question 2, what do you think was the top industry affected by cyber incidents between January and June 2021? Was it financial, aged care or living, professional services, legal, or healthcare? The top incidents by profession in order was legal, then financial, and then professional services. And this should be of no surprise as these sectors hold a lot of sensitive information and data that is valuable to threat actors. I'll now hand it over to James, who'll be going through the current cyber threat landscape.
Thanks, Nara. Hi, everyone. Today, I'd like to talk about the cyber threat landscape through an insurance lens. So when an insured suffers a cyber event, this can be in the form of a malicious attack or an accidental event to your IT or digital systems. This could include the information technology, the operational technology, the data which is stored in-house or externally, or the operational technology which is required for the business to run. There can be a wide variety of impacts to a business after a cyber event, which could be non-physical or physical in nature. A non-physical impact could include confidentiality issues, which relate to a breach of privacy, integrity issues, which relate to the unauthorized disclosure of confidential data, availability issues, which means that data will not be available for the business to operate, or they could be physical in nature. Some physical impacts include property damage or bodily injury. Property damage and bodily injury, it's important to note that these are often excluded under a cyber policy under the exclusions. These impacts lead to claims or losses under a cyber insurance policy, which can be first-party costs or third-party costs. First-party costs include appointing incident response vendors to triage and manage an event who are available 24/7 and will help to appoint law firms for privacy issues or IT forensics to assist with system and data recovery or other experts as necessary. Other first-party costs include the loss of income or increased cost of working or extortion demands relating to paying a ransomware. It's important to note there is also coverage available for cybercrimes relating to fraudulent invoicing. Another element is third-party liability costs, which relate to negligence or liability by the insured, which results in damages to others. This can be in the form of negligence in services, shareholder litigations, fines and penalties, and other claims. A cyber insurance policy will trigger for a variety of reasons, some of which include a security failure, which is the failure of a system security to prevent or mitigate a cyber attack, system failure, which is the unintentional or unplanned outage or failure of a computer system or technology, privacy breach, which is the unauthorized disclosure of confidential information which was entrusted to be protected by the insured, or a regulatory inquiry, which relates to the allegation that a regulation or law has been violated, which begins an investigation against them. There's been a wide variety of challenges driving the cyber market in recent years. One of the major ones has been ransomware. Ransomware has been prolific since 2019, and it is said that 4,000 attacks are carried out daily by ransomware perpetrators. The global cost associated with ransomware is expected to exceed $20 billion in 2021, and as such, terms are continuously being adjusted by insurers to account for this growing trend. The frequency and severity of claims we are seeing has rapidly increased in recent years. This has reshaped the loss patterns for insurers as they are constantly having to change their pricing models to adjust. In terms of a cybersecurity perspective, the insured has to be 100% successful all of the time to ensure that attackers cannot get into their systems. However, an attacker only needs to be successful one time to get in. Insurers' rating models in the past did not accurately predict the loss severity we're seeing at the moment in terms of the severity of claims, and as such are adjusting to compensate for this. Recently, we are seeing a lot of systematic loss and aggregation as a challenge driving the cyber insurance market. It is quite difficult to understand and quantify this exposure as one malware can impact multiple organizations around the world. It is interesting, as a software provider, which manages thousands of companies, which could have a vulnerability, can be used to get into numerous computers, and in many cases has impacted thousands of companies and individuals worldwide. Unlike in the past, when the market was soft, insurers are now forced to price for these systematic event losses. We are seeing another challenge is market contraction in the cyber insurance market, where conservative limit deployment means that insurers are deploying a smaller limit across the market, meaning that it is becoming increasingly difficult to get terms and higher limits. There is now significantly a higher price to obtain capacity for insurers. It is important to note that the breadth of coverage that was available over the past 7 years is now causing great concerns for insurers. As claims increase in frequency and severity, this has impacted the deteriorating profitability and has meant that insurers have had to retract coverage. One important trend that we are seeing at the moment in the cyber landscape is ransomware, and it's important to explain what this is. Ransomware is the unauthorized access, deployment of malicious code to encrypt data or to inhibit network access until a ransom is paid. In the past, we've only really seen single-layer extortion, which includes encryption of critical systems data and denial of administrator access. However, as ransomware threat actors have become more innovative and smart, they have employed new techniques to further encourage payment for ransom demand. These include double-layer extortion, and triple-layer extortion. Double-layer extortion is where threat actors look to leak exfiltrated data on the dark web or threaten to sell it to criminal gangs. And triple-layer extortion, where DDoS attacks are used to further cripple the network and prevent remediation. There are risk mitigation techniques available to businesses of all sizes to limit the impact of ransomware. These include providing formalized phishing and cybersecurity awareness training to all employees to limit the impact of phishing emails, flagging all emails which originate from outside the organization to prevent threat actors from impersonating internal employees, the use of antivirus and anti-spam solutions to eliminate some human error, enabling multi-factor authentication to prevent lateral movement by threat actors if they do get into the business, complete regular patching of all hardware, software, and operational technology, just to ensure that any known vulnerabilities cannot be used to gain access, following the principle of least privilege and network segmentation ensures that in the event threat actors do get into the business, the data that they have access to is limited and the impact of the attack can be reduced. And maintaining regular system backups just ensures that in the event the business does suffer a ransomware attack, they have the option to restore from backups. I'd just like to talk a little bit about the ransomware statistics that we have been provided by CrowdStrike. So CrowdStrike conducted a survey in 2020 called the Global Security Attitude Report. This survey was done and involved 2,200 senior IT decision makers, of which 200 of these were Australian workers in the IT field. And the responses can be seen below. So in Australia, 67% of those surveyed suffered a ransomware attack compared to the global average of 57%. 33% of those chose to pay the ransom, where compared to the global average of 27% chose to pay the ransom. The Australian average ransom amount was $1.25 million compared to the global average of $1.55 million. And Australia had an average time to detect a cybersecurity incident of 140 hours compared to 117 hours for the global average. It's important to note that in this case, Australia is lagging slightly behind the global average. I just wanted to touch on a little bit about the ransomware statistics for a small to medium enterprise and how that compares. So just so you're aware, 62% of ransomware attacks in 2020 were actually found to be on small and medium enterprises. And in another survey, it was found that the average ransomware downtime cost alone was $274,000 for small to medium enterprises, which is interesting because the downtime cost alone is only one element of a business interruption incident for ransomware. And a ransomware has other costs, which include the IT recovery costs, network remediation, and the actual extortion amount of the ransomware demand. So ransomwares are still quite expensive for a small, medium business. I just wanted to touch a little bit on the privacy changes which we are seeing in the cyber insurance space at the moment. Regulators are proactively honing in on cybersecurity compliance and are ensuring that businesses are doing everything in their power to protect their data and prevent data breaches. So these legislative reforms include the Notifiable Data Breach Scheme, the Privacy Act Review, and the Ransomware Payment Bill. The newly introduced Ransomware Payment Bill aims to impose a regulatory notification where government agencies and businesses that turn over more than $10 million will be required to notify the Australian Cybersecurity Centre before paying a ransom. Additionally, under the Notifiable Data Breach Scheme, any organisation or government agency which is covered by the Privacy Act must notify individuals and the Australian government when a data breach is likely to result in serious harm to an individual whose personal information is involved. I'd like to pass over to Nara now to talk about why cyber insurance is important.
Thanks, James. So why is cyber insurance so important? It's really important because cyber insurance responds to claims made by victims of a cyber incident. And these include first-party liability costs and third-party liability costs. So for first party, we have Incident Response Services, which provides immediate 24/7 access to incident response services following an actual or suspected cyber event. Extortion payments are we might need to cut. Thanks, James. So why is cyber insurance so important? It's really important because an insurance policy will respond to claims made by victims of a cyber incident. And these can include first-party liability costs and third-party liability costs. For first-party costs, we have incident response services, which provide immediate 24/7 access to incident response services following an actual or suspected cyber event. Extortion payments are also covered, and this also includes access to specialist ransom negotiators, where it is legal for insurers to pay a ransom. Business interruption. So any loss of profit related to business interruption following a cyber incident attack, and restoration costs will cover costs to repair and restore IT systems and data. On the other hand, we have third-party liability cover, which will cover defense and liability costs incurred for damages to others caused by the insured. So now I'll be going through a ransomware example and show you how an insurance policy would work alongside the crisis. So for example, if a client was to be hit with a ransomware attack, this would result in the encryption of data, seizing of systems, and the disruption of the daily operations. In this case, the cyber insurance policy would be triggered as a result of security failure. The client would then implement contingency plans and remediation steps, and the policy again would reimburse any reasonable extra expenses incurred, as well as business interruption loss. The client would then retain breach counsel and computer forensic experts, in which the policy would reimburse the costs for these vendors. And it's important to note that these vendors are sometimes subject to prior approval if necessary by the insurer. Next, the forensic experts would try to identify the malware strain and work to find recovery options. And at the same time, ransom negotiation would take place. It's also important to note here that paying the ransom is completely up to the client. If the client elects not to pay the ransom, IT forensics can assist in trying to recover the loss of data. Next, the ransom settlement would be made, and specialized experts will have a cryptocurrency wallet to make ransom payments. And again, the cost of ransom would be covered under the policy, but please note that there could be potential limitations due to the OFAC. And finally, if all goes well, a decryption key would be obtained after the ransom is paid, and computer forensic experts would continue to assist with decrypting the data and the recovery process. The policy would then reimburse costs incurred for data restoration as well. So for the final question, what do you think is the most common policy trigger when an incident arises? Is it data restoration costs, privacy liability defense costs, cyber extortion costs, breach response costs, or business interruption loss? So the answer is D, breach response costs. So incident response breach costs could include costs to appoint an incident response manager to triage the matter on your behalf and also manage any other vendors required, such as legal firms or on third-party liability matters, and costs for computer forensic experts. Since it's common for small to medium enterprises to not have a dedicated cybersecurity team, these clients typically rely on specialized vendors as a part of their insurance policy for cybersecurity response and management. In saying that, having a cyber insurance policy would take off the huge burden of time and the financial costs associated with a cyber incident. So how can Marsh help? Currently, the threat of ransomware is continually evolving in complexity and frequency, meaning that no business is safe. Businesses need to take a proactive approach to manage the cyber risk and consider a cyber insurance policy to provide coverage for financial, reputational, and operational harm. You can protect your business today by talking to Marsh's cyber risk experts, Heidi and Hannah, for a solution to keep your company safe. And that concludes today's webinar on cyber insurance for small to medium enterprises. Thank you for listening.